And welcome to my session today on accounting concepts, principles, conventions, and policies, part two. I call it part two again. Why? Because part one was done earlier. And for those who have missed it, it is there in the archives. You can go to that and go through it and to know what we missed in part one. But I will be having a quick recap on what we missed in that class before we start today's session. So that you guys are in tune. Hi Aryan, hi Manjari, hi Urvashi, hi Rahul Gupta, hi Ritija. Thanks for joining in. Yes, Aryan, you're new here today, and for your benefit, I will recap what we missed in part one. All right, so stay tuned. And also, I request for the people who have not yet followed my profile on the Unacademy app, I request you to go to the Unacademy app and on my profile and click on the follow button so that you get real-time notifications about my sessions, timings, and the topic so that you never miss it. Hello, Urvashi. Hello, Aryan. Nice to see you all here on a Sunday. Thank you so much. Okay, so let's start off. So first and foremost, I'd like to welcome you to Unacademy, India's largest online learning platform, which gives you a world of courses, resources, and content to choose from. It has various content and courses for various examinations, and various educators, expert educators are empaneled by Unacademy. So what you get to do is you get to listen to the educator of your choice, pick the topic, pick the educator, and more importantly, you get to pick the time as well. Now, I'm part of the CA Foundation and Intermediate vertical, which is a crack CA with us vertical of Unacademy, and I welcome you all there once again. A brief introduction about the educator, that is me. Hello, I'm Prathik Gupta. I'm a BCom graduate from Christ College, Bangalore University, Bangalore. I'm an associate member of the Institute of Cost Accountants of India, an associate member of the Institute of Company Secretaries of India, and an associate member of the Institute of Chartered Accountants of India. Along with this, I'm also a law graduate from Karnataka State Law University and currently a practicing chartered accountant. Along with this, I'm also a tutor for CA students both offline and online, and also as a visiting faculty. And before I started my practice, I was working with SR Bartley Boy & Associates, that is an Indian member firm of Ernst & Young Global in the audit and assurance department. Post that, I worked with Ernst & Young India in the mergers and acquisitions department. And then I worked with the Manipal Group, where I was the corporate controller of the Indian entity as well as the German entity. Post that, I decided to start my own venture, and then I started on my own. Here I am talking to you fine people today. So thanks for this opportunity. Now, once you subscribe to the Unacademy platform, what do you get? First and foremost, you get daily live classes. As I said earlier, you get daily live classes of your favorite educator, of your favorite topic. And not only this, it is not a one-way communication, but it is a two-way communication where you get to clear your doubts and discuss with the educator on a live one-to-one basis. You do not need to wait for a week, 2 days, 10 days, or take an appointment. You can clear your doubts and have a discussion then and there with your educator on an online and real-time basis. There is no delay in getting a response. Then the Unacademy platform performs a lot of live quizzes and tests to help you evaluate your performance and to where do you stand, so that you can identify your weak areas and work on them, and so that you can also identify your strong areas so that you spend lesser time on them and can compensate that time on your weak areas. So these live tests and quizzes help you in your overall preparation. The courses provided by Unacademy are structured courses. They are structured courses in a sense that they help you in your step-by-step preparation, and they try their level best so that you do not miss any important point while your preparation is on. I mean, for competitive exams or for major exams, the syllabus is quite wide. So an effort is always made for you to complete the syllabus or complete and cover all the important points as much as possible. Hello, Sumit Kumar. Thanks for joining in. Welcome to my session. And most importantly, Unacademy provides you unlimited access to the world of content, courses, and resources that it has to provide to you. And where again, you get to choose your educator. And most importantly, you can listen and re-listen to anything that you want at any point of the day without any restrictions or limitations. So this is, I think, personally think this is one of the biggest advantages of Unacademy, and you should make the most of this opportunity. Hi, Sumit. How are you? Trust you're doing well. हाँ राहुल, क्लास स्टार्ट करेंगे. Just give me another 2 or 3 minutes. For those of you who have not yet downloaded the Unacademy Learning app, I request you to download the Unacademy Learning app from your Play Store and register on it. It is quite simple procedure. You need to download the app. You need to put in your mobile number, and then once you put in that, you get an OTP. Use that OTP, and oh yes, Aryan says he's a plus student. So dear participants, you have a plus student among you who has subscribed to the Unacademy platform, and he vouches that it is awesome. I second him. So you can I encourage all of you to become a part of the plus program by Unacademy as soon as possible. All right. So, and for those of you who are already on the Unacademy Learning app, I thank you, and I request you for your continued support in the future as well. Now, I am part of the CA Foundation and Intermediate subscription. And as part of the Plus program, the Unacademy provides the following subscription packages for the CA Foundation and Unacademy program. They provide packages for 1 month, 3 months, 6 months, 12 months, and 24 months. The rates of those packages are displayed in front of you on your screen. I request you to go through each package and the cost of the same. And while you have made up your mind on which package you want, do not forget to use the code Prathik, Prathik, to get a discount of 10% on the subscription price. I personally will encourage you to go for the 12 months or the 24-month subscription simply because it is cost effective. And secondly, when you decide to prepare for any major examination, 1 month or 3 months is not good enough time. And you normally require a period of 12 months to 24 months to prepare effectively and properly. So my personal suggestion will be go for a 12-month or 24-month subscription. But yes, the end decision is yours. So please, you can choose whatever suits you best. But do not forget to use the code Pratik when you have decided on your subscription. So I look forward to seeing you as part of the Unacademy Plus family very soon. All right, so let's start off today's session. Now, Rahul, I hope you're listening. We are about to start the class. All right, accounting concepts, principles, conventions, and policies. Now, this is the basics of accounting for your CA Foundation course, what I'm talking about. I'm sure all of you have done accounting in your maybe 12th standard or your first year and second year and third year of degree, right? So you know what accountancy is. It's not completely new to you. Thanks, Aryan. Thanks for the response. Thanks for being so interactive and proactive. I appreciate it. I encourage the other participants also to be interactive because I would like my sessions to be a two-way session and not a one-way session. All right. Thank you so much. Hi, Harshit Tyagi. Welcome to my session. Thanks for joining in. So accounting concepts, principles, conventions, and policies. So let me have a quick recap on what these were. Now, we discussed in the last part one, that accounting concepts, principles, and conventions are certain rules and regulations, certain practices, or certain unsaid rules and regulations that need to be followed when you are doing accounting. Now, these rules and regulations have developed over a period of time due to usage and custom, or these have developed due to the law administering accounting, or these are basically concepts that you need to logics or logical steps that you need to follow so that whoever is the person preparing the accounts gets the same result or more about the same result. Please remember, if you are in a situation wherein the same data is given to 5 or more accountants, and all 5 accountants give you a different profit and loss account and a different balance sheet, how would you feel? Suddenly, you would actually start losing trust on the whole accounting process. So to avoid this, the accounting principles, concepts, conventions, and policies were developed so that there is uniformity in the entire accounting function and domain. So no matter if an accountant is sitting in Bangalore, or no matter an accountant is sitting in Maharashtra, or an accountant is sitting in Delhi, or an accountant is sitting in West Bengal, all of them get pretty much more or less the same results. And when I say results, I'm talking about the profit and loss account and the balance sheet. Are you with me so far? All of us know what a profit and loss account and balance sheet is and how it is made. First and foremost, am I audible? Am I visible? Can people see me and hear me clearly? Yes? Thanks, Aryan. Others? What about Harshit? What about Ritija? What about Manjari? What about Rahul? Can you see me and hear me clearly? What about Urvashi? All right. Respond when you get the when you find the time. So now these are, so please remember, you need to have uniformity in the profit and loss account and balance sheet. And for this purpose, accounting concepts, principles, conventions, and policies have been introduced or put into the accounting domain so that there is uniformity. There is no other reason for these. So that whoever does the accounting job knows about these principles, concepts, and follows them thoroughly. Okay. So next, introduction. Now, like I told you, this was again what we've done in part one. So hi Sachin, thanks for joining my session. Welcome to my session. So I've already given you this example that you have the same data given to 5 different accountants, and if all 5 accountants give you a different P&L and a different balance sheet, then it will be a problematic situation. To avoid such a problematic situation, accounting principle, concepts, procedures, and policies have been introduced. Now, what do you mean by accounting concepts? Quickly, because I've done this in part one again. Accounting concepts define the assumptions on the basis of which financial statements of a business entity are prepared. Certain concepts are perceived, assumed, and accepted in accounting to provide a unifying structure and internal logic to accounting processes. Now, accounting concepts simply means certain assumptions that you make before you start the accounting procedure, and these assumptions are very important in order to give you correct accounting results and accounting reports. Okay, the word concept means idea or notion which has universal application. Financial transactions are interpreted in the light of concepts which govern accounting methods. Concepts are those basic assumptions and conditions which form the basis upon which the accountancy has been laid. Unlike physical science, accounting concepts are only result of broad consensus. The meaning of the term broad consensus means broad acceptance and application. It means when a group or a large group of people accept these assumptions, logics, or ideas and they apply it uniformly, then accounting concepts come into existence. All right, I repeat, broad consensus means acceptance of a broad category of people or professionals. These accounting concepts lay the foundation on the basis of which accounting principles are formulated. So obviously, see, you need to have certain assumptions. Now, let's take for example. Now, the reason that I am taking this session for you, and is it wrong for me to assume that because you all are attending my session, you are appearing for your CA Foundation exam very soon, or some of you have appeared for your CA Foundation exam and will be reappearing for your CA Foundation exam? Is it wrong? Kindly reply. Is it wrong for me to assume? No, right? Yes. So Aryan is giving his CA Foundation in November first time. Aryan, all the best, and I hope you can prepare very well, and I hope I can contribute in your preparation positively. So it's not wrong for me to assume that all of you today attending my session or viewing this session right now are going to appear for your CA Foundation exam very soon. Okay, so now this assumption is made, right? The assumption that you guys are appearing or interested in the CA Foundation exam is made. Now, based on this, can I go ahead and make more principles? Can I go ahead and make more timetable? Can I go ahead and say, okay, guys, please tell me which topic do you want me to prepare a presentation on, or which topic do you find difficult to understand? Please tell me so that I can make a presentation and session on that. So that, what am I doing there? Based on the assumption that all of you or most of you are going to appear in the CA Foundation exam, I have taken it to the next step of actually preparing a session or a schedule for you, especially. So that is what you mean by accounting concepts. Accounting concepts are the underlying or the basic assumptions based on which the policies and the principles of accounting are formulated. Is it clear? Okay, now what are the accounting principles? Accounting principles are a body of doctrines commonly associated with the theory and procedures of accounting, serving as an explanation of current practices and as a guide for selection of conventions, procedures where alternatives exist. Hi Manshu, thanks for joining in. Welcome to my session. Application of principles must satisfy the following condition. They must be based on certain assumptions. Now, before we start into this, what do you mean by principles? I explained this in part one as well. You can go back and refer to that, but quickly, what do you mean by principles? Principles are certain ideologies or doctrines. Doctrines mean nothing else but beliefs that certain things exist that you need to follow consistently in order to get better results. Now, today you are studying for your CA foundation exam. So you might, hi Kalpana, thanks for joining my session. Welcome to the session. So you might be making a, hi Kalpana, you might be making a timetable for yourself, a schedule for yourself, that this is what you need to do, this time to this time you need to study. So these are principles. Or you might suddenly make a decision that unless and until I finish this chapter today, I will not get up. I will finish that. That's the way I used to study, by the way. Just a little away from the topic. I never measured the number of hours that I study. I always measured the amount of syllabus I could cover in those hours. And for example, I always gave an incentive to myself. I'm deviating from the topic. Okay. Now, so if in case a particular chapter or particular subject had 10 chapters, I divided it into 5 days. That means every day I do 2 chapters of that subject. So as a rule or a principle, I selected one big chapter and I selected a small chapter, so that I get a mix of things, and it's not very difficult for me to study. It was easy for me to study. So if I normally gave myself about 6 to 8 hours of studies a day, and that was the time I kept for myself for my studies. And when I started studying one big chapter and one small chapter, normally if I finished both the chapters, the big one and the small one, maybe one of those days where my grasping was very good, or I was able to understand and follow each thing very well, that day if I finished both those chapters in 3 hours, trust me, for the remaining 5 hours of the day, I didn't do anything. I did not sit down and take the third and fourth chapter and sit down, because then there was no incentive for me. There was no motivation for me to finish my syllabus faster. So if I finished my syllabus, which I allotted 8 hours, if I finished that in 3 hours, the remaining 5 hours I relaxed, I slept, I went and played something, I went out with friends, I went out for a walk and this thing. And then next day I continued my schedule again. Now look at the flip side. Now if sometime those 2 chapters, instead of taking me 8 hours, they took me about 12 or 14 hours, I still did not get up from my table until I finished those 2 chapters. So that is the discipline or the principles that I followed, that until and unless I finish this chapter or the allotted chapters for the day, I will not get up from the seat. So this is called principles, and this is something which I want to share with you as well, that once you prepare or make a schedule for your preparation, please do not make it a time-based schedule. Please make it a target-based schedule. That okay, now hi Arav, thanks for joining my session. Welcome to the session. Make it a quality-based session. That yes, this is what I'm going to finish, and if it's early, if you finish it early, please get up from your seat and do something else. And if it takes time, then please finish it and only then get up. So this is the principle. So accounting principles must satisfy the following condition. They should be based on real assumptions. Yes, Aryan, exactly. Assumptions give rise to principles. Like I told you, my assumption that all of you are going to write your CA foundation exam soon will give rise to certain principles, that every day I'm supposed to take 3 or 4 sessions for you. Which are the topics that you might find interesting? Which are the topics that you want me to take a session on? Hi, Ajit Kumar. Thanks for joining in. Long time. Nice to see you here. Hi. Okay. They must be simple, understanding, and explanatory. They must be followed consistently. They should be able to reflect future predictions, and they should be informational for the user. So whatever principles you choose or whatever principles you formulate, they should have these 5 characteristics. Let's proceed. Accounting conventions. Now let's talk about what accounting conventions are. Accounting conventions emerge out of accounting practices, commonly known as accounting principles, adopted by various organizations over a period of time. Now please remember, if you have studied for your CA exams in a particular way, and that particular way has helped you out. Okay, so obviously if you have siblings or your friends who are younger to you, and in future if they take up the CA course, your method of studying will be helpful to them. And obviously you would like to share it with them, that when I was a student, this is what I did, this is what I followed to clear the exams. So then those accounting principles become conventions. If your principles become conventions for them, that okay, if Aryan has studied a particular way and cleared the exams, then obviously that way would have actually worked for him. So let me also try it, or let me also follow it, because it has been tested and proven to work. Okay, so the accountancy bodies of the world may change any of the convention to improve the quality of the accounting information. Accounting conventions need not have universal application. Like I said again in my previous session, a lot of almost all the countries in the world have their own gap. Gap means generally accepted accounting principles, and constant efforts are being made that the gap of all the countries are uniform, and so that the accounting information or the accounting reports prepared by the countries are to the maximum extent possible uniform in structure. I mean, today, if the US company makes a completely different report, Indian company makes a completely different report, it somewhere will lose, you will lose the whole objective of accounting. If the reports are very different, if they are different about 20-30%, it's okay, we can do a reconciliation and matching. But if the reports are very different, then it is a problem. So in order that the reports of the various countries and the various companies or the various reports in the same country are constant and uniform to the maximum extent, accounting principles, conventions, policies come into the picture. Okay. Hi Ali Raza, thanks for joining my session. I hope I pronounced your name properly. Okay, now accounting concept and conventions and overview. The first important concept that you need to follow when you start doing accounting is the entity concept. What does the entity concept say? An entity concept says that when you are preparing the accounts of an entity, be it a proprietorship, a partnership, a company, a trust, or whatever, you should prepare it separately or treat it separately from that of the owner of the entity. The owner's accounts and the entity's accounts cannot be clubbed up into the same accounts. If it is done so, it will give you a wrong picture of the affairs of the entity. I repeat, an entity concept simply distinguishes or separates the entity from its owners. They are not treated like the same thing, be it a proprietorship, be it a partnership, or be it a private limited company or a public limited company. The owner's accounts and the entity's accounts are always done separately. Please take about 30 seconds and read the slide, and then I'll be happy to answer your questions if any. Hi Gina, thanks for joining my session. Welcome to the session. Again, I request all the people who have not followed my profile on the Unacademy app to please follow my profile on the Unacademy app. Go there and click the follow button so that you get real-time updates about my sessions, the topic, and the timings of my session. And for the people who have done so already, thank you so much. Look forward to your continued support. Any questions, please ask me. Thanks, Aryan. Appreciate it. I request the others who have not done it yet to do it as well. Okay, good, Aryan. Now the money measurement concept. Now this is a very important concept which you need to remember, and this is also the basics of accounting. Now please remember, in the money measurement concept, hi Rendra Singh Chauhan, thanks for joining my session. Most welcome to you. Money measurement concept simply says only transactions which are measurable in terms of money. Hi Hirendra Singh, and which involve money, taking or giving money, will find a place in accounting. No other transactions which do not have any money involved in it will not find place in accounting. It simply means if you buy something or sell something, or if you pay someone or you receive money from someone, everything will find place in accounting. But if unfortunately an employee leaves the company, or the employee passes away, or the owner of the company passes away, or one of the directors' health is bad, and a lot of people are quitting your company because of your company's management, all these events, even though are important, will not find place in accounting. Only events and terms which are measurable in terms of money will find place in accounting, and nothing else. This is hi Maharashtra Kamble, thanks for joining my session. Welcome to my session. So you need to be very careful about this. Uh, now you might ask me, sir, what about those events like employees coming and going, employees going on strike, or the directors leaving the company? Where will all these events come? Please remember, these will not come in financial accounting, but these will come in a body of accounting called management accounting, where management requires this information so that they can take timely decisions. So for them, all this information will be required, but that will be only internal. This information about people leaving, directors leaving, and this thing will not form part of your profit and loss account and your balance sheet and your cash flow statement. Only items which impact money will come there. Take 30 seconds, read the slide, and we proceed. Thanks, Aryan. That was quick. We'll wait a few more seconds for the others to do it as well. Any questions, please ask me. I will be more than happy to answer. Okay, now the third concept that you need to rely on is the periodicity concept. Please remember, the accounting information or the accounting records need to be prepared for a particular period. Now, if your company was started about 4 years or 5 years ago, you cannot prepare one statement from the beginning of the company till end of 4 years. So you can't prepare a 4-year statement. Even if you do it, does it serve any purpose? If you prepare a balance sheet and profit and loss account for a period of 4 years, will it provide any support to you or any information to you? I don't think so. Instead of making one balance sheet and profit and loss account for 4 years, if you made 4 balance sheet and profit and loss account for each of those 4 years, then do you think it would have given you helpful information? Yes or no? I repeat my question. Rather than making one balance sheet and profit and loss for a period of 4 years, will it be better if you make 4 profit and loss account and balance sheets for each of those 1 year? Will that be more helpful to the management and the users of the financial statement? Yes, Aryan, why do you say so? Why do you think so, and why do you say so? Hi Rajni, thanks for joining my session. Welcome to my session. Easy and helpful, how? How does it help, and how is it easy? Yes, Aryan, go on and explain. Anyone else can answer as well. So obviously it will be easier to prepare 4 balance sheets and profit and loss account for 4 different years rather than one balance sheet for 4 years, and because likewise, if time is divided, it becomes easy. Right. If it is divided, it helps you evaluate and compare the performance of 1 year with the performance of the next second year, then third year and fourth year. If one item is low 1 year and high next year, you can always ask questions. If one item is high first year and low next year, you can always ask questions. So it's always good. Hi Saloni Kumari, thanks for joining my session. Welcome to my session. So it's always good if you prepare these financial statements at regular intervals. Now you can prepare these statements for every week if you want, or every 2 days if you want. No one stops you. You can prepare the profit and loss account for 1 day, 2 days, 1 week, 3 weeks, 2 weeks, whichever period you want. But as per law, you're required to prepare it for a period of 1 year. In India, it is from 1st April and ending on the 31st March of the next year. In different countries, there are different days. Like for the US, I think US follows 1st Jan to December 31st. Okay, because that is as per US GAAP. As per Indian GAAP, we need to follow 1st April to 31st March. Are we clear so far? Any questions before we move on to the next concept? Anyone else? No questions? Saloni, any questions? Rajni, any questions? Rahul, any questions? Ritija, any questions? Urvashi, any questions? I'm sorry if I've forgotten the remaining names of the participants, but any questions, please ask me. Please be interactive. Hi Namita, thanks for joining my session. Thank you. Hi Alexi Rajput, thanks for joining my session. Most welcome to my session. Again, if you have not followed my profile on the Unacademy app, I request you to follow my profile on the Unacademy app. to get real-time updates about the timings and topics of my session so that you do not miss it. All you need to do is just go onto my profile and press the follow button, and you will be getting timely updates about my sessions, the topics and the timings. I will be taking sessions on YouTube as well, so you can look me up on YouTube, and you can follow me and like me there as well if you think my sessions are important to you and are adding value to you. Then you're most welcome to like it and follow it. If not, please give me your feedback and I will make sure I can improve. I'm always open to positive feedback. Okay, thanks, Alexi. Thanks for your response. Okay, so periodicity concept is done. Now let's come to another important concept of accrual concept. Now please remember, you always have two choices of maintaining your accounts. One is on cash basis and one is accrual basis. Can someone tell me the difference between cash basis and accrual basis? Quickly, can anyone tell me? This is a very important concept. I will explain it to you with the help of an example also, but let me see your level of understanding on what is cash basis and what is accrual basis of accounting. Anyone? Can anyone explain? Hi Nishchay Singh, thanks for joining my session. Welcome to my session. If I'm not mistaken, this is my first session that you're attending. Yes, Nishchay? Very nice, Alexi. I am inspired. I mean, you're in class 11 and you want to study for the CA Foundation exam. That's very good that you're already starting at a early level so that you get your foundation right, so that you can do your CA Foundation right. Very nice. Nishchay, I'm in 9th. All right. Thanks for attending my session, and stay tuned. Please click on the follow button on my profile. Cash basis, Namita and Rajni have answered. Cash basis record after payment. And Namita, cash basis transactions are recorded only when cash received. On accrual basis, transactions are recorded when it is realized. Not entirely. Okay, let me tell you. Now, on cash basis, whether you pay cash or whether you receive cash, you will record the transaction only when you pay the cash or when you receive the cash. So if it happens on the same day that you buy the product and you pay the cash, then it's okay. Or if you receive the service and you pay the cash, then it's okay. But what happens if there is a time gap between the two? Let's say you have gone to a mobile shop and bought a mobile today, but you've paid for it after a month. In that case, how will you account for it? Let's say you are going on March 31st, and you go March 31, 2020, and you go to a mobile store and you say, I want a mobile. So the mobile store guy says, okay, the mobile is for 15,000, sir, please pay. So you tell him, no, he's your friend. So you tell him, no, you give me the mobile and you give me the bill. And on the bill, you say credit of 1 month. So I will pay you that money for the mobile after 1 month. Simple, fair enough. So then you come back, you take the mobile and you come back home. How will you account for it? Now in your books of accounts, what is the closing period? Your books are starting on 1st April and closing on 31st March 2020. So today you've got the mobile. So in your books, you have entered that mobile purchased. But what about the payment? Have you paid for it yet? If you did pay for it on March 31st, then simple, right? You will say, okay, cash paid for the mobile and mobile purchased. But have you paid for it? No, you have taken it on credit. So when will you be paying for it? You will be paying for it on April 30, 2020. But when are you closing your books of accounts? You are closing your books of accounts on 31st March 2020. So even though you have not paid cash for it, for the mobile, you need to book that expense or that purchase on an accrual basis. That means the mobile store owner will appear as a person to whom you have to pay the money after a week or after a month. So that is what you mean by accrual basis. Similarly, if you have sold something to the end customer, but the customer has not paid you, still that sales will be recorded in your profit and loss account on credit basis, And whenever you receive the money from the customer, you will put that entry in the customer's account. But you cannot put the sales in your books when you receive the money. You will have to put the sales in your books when you make the sales. On March 31st, 2020, if you have sold any product, then on that day itself, you have to book the sales. When I say book, that means enter the sales in your accounts. Are you clear? Similarly, if there's any purchase or similarly, if there's any expense, you need to book it or enter it in your books of accounts on the day it happens, irrespective of when you pay for it. Are you clear? Any question? This is a very important concept and you need to know, because most organizations today are following an accrual basis and very few are following a cash basis. So you need to be versed with what is accrual basis. Yes, Aryan, on credit basis too? Yes, on credit basis. Accrual means irrespective of when you receive the money or pay the money, if a sale or purchase or expense transaction happens, you need to book it in your books of accounts on the day it happens. You cannot wait for the day when you receive the payment or make the payment. Is it clear? Any questions? Please ask me. Anyone? Any questions? Kalpana, any questions? Manjri, any questions? What about Manjri? Any questions, Manjri? Thanks, Kalpana, for the answer. Thanks, Aryan, for your reply. Okay, now let's talk about today's topic, fundamental accounting assumptions. Now we have spoken about assumptions, principles, conventions, right, in the first two slides. So today let's come to one of the most important fundamental accounting assumptions. Now please remember, these three assumptions have to be followed whenever you prepare the balance sheet and profit and loss account or financial statements of any business entity. By any business entity, I mean any entity carrying on business and which is required to prepare its profit and loss account, balance sheet and cash flow statement, be it a proprietorship firm, be it a partnership firm, be it a private limited company or anything. All business establishments have to follow these accounting assumptions when they are preparing their balance sheet and profit and loss account. Clear? Now, what are the three fundamental accounting assumptions? Going concern, consistency, accrual. Now, what do we mean by this? I mean, have we heard of these terms somewhere? Can anyone tell me what a going concern concept is before I get into it? I will explain it to you, but let me know your understanding on going concern concept. Can anyone tell me what a going concern concept is? G. Aryan, लगातार चलना. Can you explain that? No end. चलिए लग. Can you explain that a little further? Yes, yes. I'm sorry, I'm unable to pronounce your name. Hi, Manjari. A business will continue for a long period. Yes. Alai Raza. Is that your name? Is that the way it's pronounced? Did I pronounce it right? Or it's Ali Raza? Pardon me if I'm pronouncing it wrong, and that's the reason I'm asking you how to pronounce your name. Just Ali? All right, sounds good. Thanks, Ali. All right. So Ali says company expected to continue for a foreseeable future. Perfect. Manjari says business will continue for a long period of time. Aryan says lagatar chalna, no end. And if business is started, then assumed not to do end of it, not assumed to do so. All right. All of you are partly right. Yes. Going concern concept simply means when you prepare the accounts of a company, the basic and the most fundamental assumption that you need to follow is that company has no intentions to shut down its operations in the near foreseeable future. Okay. Now we do not know. Okay. Kalpana says nothing is showing and my voice is echoing. What about the others? Can you see me and can you hear me clearly? Manjari, Aryan, Ali, Ritija, Urvashi, Rahul. Can you all see me and hear me clearly? Is there a problem? Please respond and let me know. Because Kalpana says she is unable to see me and my voice is echoing. Is that true? What about the others? Okay. Thanks for all your responses, Ritija, Kalpana, Manjari, Nischay, Aryan, Ali. Thank you. Thank you for letting me know everything is okay. Kalpana, I hope you can hear me and see me clearly now. Yes? If you can, let me see a response from you. Thank you. Okay, so now going concern concept simply means whenever the accounts of a business entity is prepared, it is the basic. Yes, Rajni, using some rules to prepare books of accounts every year. Yes, these rules have to be uniformly applied by the entire, by a majority of the population to get uniform results. That's what we are talking about. Fundamental accounting principles, assumptions, concepts. That's what we are talking about in today's session. Yes, you're right. Okay, so going concern simply means whenever you prepare the accounts of a business entity, it is prepared with the fundamental assumption that the business entity does not have an intention to wind up on a in a near foreseeable future. Near foreseeable future could be 5 years, could be okay. I'm sorry, there was a power cut and the internet went off. So am I visible and am I audible clearly? Am I back? Yes. Can everyone see me and hear me? Can I have a response? Yes, Nishchay has responded. What about the others? Kalpana, Manjari, Radha Mohanty, thanks for joining in. Welcome. Ali, Aryan, Anubhav, thanks for joining. Welcome to the session. Rajni, can you see me? Can you hear me? All right, let's continue. So, we were talking about going concern. Now, why do you think going concern concept needs to be followed? Going concern needs to be followed because please remember in India we follow accounting based on cost basis. So, whatever is our transaction that we have incurred, maybe we bought a piece of land 10 years ago, so that in our accounts, that land will appear at the cost in which we purchased it 10 years ago. We will not put it for today's market value, which a lot of other countries, advanced countries, use the market value approach. But in India, we use a cost approach. So how is that connected with going concern? So in case we have a going concern, that means we are not planning to shut down operations or close business for the near foreseeable future. In that case, then the accounts will continue to be prepared with a going concern concept under a cost basis. So what happens if suddenly you get to know when you're preparing the accounts that the company or the business is planning to shut down in 1 year's time? What difference will it make? How will it make a difference into your accounting approach? So to answer that question, how many of you have heard of something called as liquidity basis? Liquidity basis means in order to sell whatever prices you get, then your accounts will be prepared on a liquidity basis, okay, or a liquidation basis. Simply let me explain it to you. Let's say you have a piece of furniture which you bought for 20,000 rupees 5 years ago. So in your books of accounts, what is appearing is furniture at 20,000 rupees minus depreciation. All of us know what is depreciation. Can anyone tell me what's depreciation? What is depreciation? Kalpana, is it stuck? What about the others? Can you see me? Or again, the audio is stuck. Nischay, Poonam, Manjari, can you see me and hear me? Kalpana, I think you need to refresh. Aryan, yours is stuck as well. What about the others? Can you see me? Ritija, can you see me? Aryan, can you see me and hear me? No? Nischay can. So I think you need to just refresh. Just refresh and come back. Because some people can see me, some people cannot. So I think you just need to refresh your connection. Aryan, all good? All good. Kalpana? Mm-mm. Okay, just hold on. Let me refresh. Okay, now can you see me? Can you hear me? The participants, I request you to refresh your connection, refresh your page. Hi Umesh and Nishchay, can you all see me now? Nishchay, Aryan, Umesh, Kalpana, Manjari, Ritija, can you all see me? Kindly respond. Hi Umesh, thanks. Welcome to my session. Can you see me and hear me, Umesh? Okay, Alexi can, Nishchay can. Hi Yashika, thanks for joining my session. Welcome to my session. All good? What about Kalpana? What about Ritija? No response. Can you see me and hear me? Just let's wait for another minute. Let us get a confirmation from everyone. Yes, so whoever can see me and hear me, can you respond? Okay, so let's continue. So depreciation, like someone has answered. Alexi has answered. The monetary value of an asset decrease over time due to wear and tear or obsolescence. This declaration is measured as depreciation. Perfect, Alexi. Very good. Now, depreciation is the loss in the value of an asset due to normal wear and tear, passage of time, technological obsolescence. Let me give you a simple example. When we plan to buy a new car, when the minute we walk into the showroom, the person says, sir, this car is worth 5 lakhs. All right, so we do everything. We test drive the car, we check the car and everything, and we buy the car. So the minute we take the car from the showroom, let's say we just reverse it outside the gate, and suddenly you think, no, that's not a car, I don't want to buy it, I want my money back. So you take the car inside the showroom again, and you tell him, no, sir, I just bought the car 2 minutes back. I don't want to buy the car now. Please take it back and return my 5 lakhs. Now, do you think the car showroom is going to return your 5 lakhs to you? No, it will say, no, sir, you've already used the car. Now it's become a second-hand car, even though it was for 2 minutes. Now, instead of 5 lakhs, we will pay you 4,90,000 rupees. So, hi Shritam Mahapatra, thanks for joining my session. Welcome. So, this 10,000 rupees, what was there, 5 lakh minus 4 lakh 90, is the loss in the value of an asset due to passage of time, obsolescence, or for any other reason. Similarly, all assets except land undergo depreciation. Land cannot be depreciated, and land, normally the value of land only appreciates. All right. So in case, well, like the example I was giving you for going concern. So let's say that suddenly the accountant discovers that your company is going to shut down in 1 year's time. So, and if you have some furniture in your company which you bought 4 years ago for 20,000. So over a period of 4 years, that furniture has been appearing in your books of accounts at 20,000 minus depreciation, okay? So let's say the book value. Book value means cost minus depreciation. So let's say the book value of that furniture has become 12,000 rupees. Now let's be honest with each other. If today you have a furniture which is 4 years old, which you bought it for 20,000 rupees, today after depreciation, if the value is 12,000 rupees, if you go to buy or sell that furniture to someone else, will that person actually pay you 12,000 for it? No. He will tell you, sir, I will pay you 3,000 or I will pay you 4,000 for it. I will not, even though you paid 20,000 4 years ago, currently the market value is only 2,000 or 4,000 rupees. I will not give you anything more. So coming back to the example, in case you know that the company is going to shut down next year or it's already planning to shut down, then instead of showing the assets at the cost, you will show the assets at the market value of whatever they are going to realize if you try and sell them in the market. Are you clear with this? Any questions? Please ask me. Any questions? Yes, it is the process of allocation of the cost of fixed assets over its life. Yes, Aryan, you're right. It's also the loss in the value of an asset. So now, are you clear with going concern concept? So unless until proved otherwise, going concern concept is supposed to be followed for a company or a business entity. Now next, let's go to consistency. Please remember, whatever accounting policies, procedures, principles, or conventions you have selected, or let's say a depreciation method also you have selected, you need to use it consistently year after year. Please do not use different policies in different year. If a particular policy, convention, or rule has been selected and used in one particular year, make sure that next year also that particular rule, convention, or belief is used. Because if every year you start changing the conventions and principles you're following, then your accounts will be in a mess and they will not give you the correct picture. Hi Sunny, thanks for joining in my session. Welcome to my session. All right, and then we come to the third point, is the accrual concept. Accrual concept I have already explained to you about recording transactions as and when they occur, not as and when you pay for them or receive money. Aryan, consistency in the selection of a method for every circumstances for financial statements. Perfect. So whatever accounting principles, policies, concepts you use in a particular year, make sure that you use it consistently year over year. Please take about 30 seconds and read the slide, and then we proceed. Okay, please ask me if you have any questions anytime. Now is the audio and video clear for everyone? Is made in certain exceptional circumstances. It could be anything. It could be change in management. Now the management has changed and suddenly the management wants to change the accounting policies that are used. So in that case, that is an exceptional thing. Or there is a change in the government policy. The certain method or something that was allowed by the government earlier, later it is not allowed. Ali, what if we need to change from cash basis to accrual? Yes, you can do that. But please remember, today in India, most, if not all, business entities are supposed to follow accrual basis and not cash basis. So you need to follow accrual basis. Cash basis used to be there, but not anymore. Now you need to follow the accrual basis. Okay? So please go through consistency and accrual. Accrual, I'm not repeating it again because we have done it earlier. Any questions, please ask me. I hope the audio and video is okay now. Everyone can see me and hear me? Yes. Aryan, possible this exception is possible for the accounting bias? Sorry, Aryan, I didn't understand your question. Can you rephrase? Possible if account is biased? No, not exactly. It's not for the biasness of the accounts. But yeah, like I said, change of management, change of government rules and regulations. At that point, you may have to undergo changes in the accounting policies, procedures, conventions that you have selected. Okay? Now, accounting policies. Now, like we have spoken about conventions, principles, procedures, and concepts, we talk about the last topic for the session, that is accounting policies. Accounting policies refers to certain accounting principles and methods of applying those principles adopted by the enterprise. Just for negative sense, change in method. What is that, Aryan? What's your question? Adopted by an enterprise in the preparation and presentation of financial statements. Policies are based on various accounting concepts, principles, conventions that have already been explained. There is no single list of accounting policies which are applicable to all enterprises and circumstances. The areas wherein different accounting policies are frequently encountered are given as follows. Now, okay, Aryan, tax bachane ya profits zyada dikhane ke liye changes. Yes, that can be done as well in case of valuation of your inventories. In case you change the valuation of your inventory, your profit number changes. And if your profit number changes, your tax number changes. Okay, so that again, a lot of people do it, but whether it's right or wrong depends on the situation. Okay, so you shouldn't be changing your accounting policies and principles very often. So now the areas wherein different accounting policies are frequently encountered. Now to answer your question, Aryan, now these are two examples where accounting policies and methods are changed. Okay, one is valuation of inventories. Do all of us know what is inventory? Inventory means closing stock. Now, closing stock could be closing stock of raw materials. It could be stock of finished goods, or it could be stock of traded goods. For example, if a company buys and sells mobiles, when it buys mobiles from the supplier and stocks it, then it becomes its inventory. And when it makes sales from that inventory itself, it keeps making sales. Ali, yeah, what your question? Changes can be done retrospective or prospectively. Changes have to be done prospectively. You cannot change the policies and procedures of previous years. Okay, it has to be only moving ahead. You can't do it for the previous period. Okay. Yeah. Yeah. Now, valuation of inventories and valuation of investments. So these are two areas where your accounting policies, principles keep constantly changing. Now, please remember, whenever you select an accounting policies, you need to be very careful about which accounting policy you select. Choice of accounting policy is an important policy decision which affects the performance measurement as well as financial position of the business entity. Selection of inappropriate accounting policy may lead to understatement or overstatement of performance and financial position. Like Aryan said, your profit numbers and tax numbers could be changed drastically if you do not use the correct accounting policies and principles. So you need to choose the right ones. Thus, accounting policy should be selected with due care after considering its effects on the financial performance of the business enterprise from the angle of various users of accounts. Examples wherein selection from a set of accounting policies is made can be given as follows. Inventories are valued at cost except for finished goods and byproducts. Finished goods are valued at lower of cost or market value, and byproducts are valued at net realizable value. Now, please remember, quickly I will go through this. The inventories of a company, that means stocks, stock of finished goods, stock of traded goods, are valued at cost of obtaining them or production or net realizable value. By net realizable value, you mean if you sell it to a customer outside, what is the amount you're going to get, or cost. So whichever is the lower of those, your inventory will be valued at that. Are we clear? Similarly, investments long term are valued at their acquisition cost. Provision for permanent diminution in value has been made whenever necessary. Now, if let's say you make certain long term investments for more than 1 year are considered as long term investments. You make certain long term investments, and those will be recorded at cost. Whatever cost you made those investments, those will be recorded at cost. Okay. Now, there might be certain situations in which you have to change the accounting policies. Now, like Aryan asked me and Ali has been asking me, please note these are the situations in which the accounting policies can be changed. It is required by some statute or compliance with an accounting standard. Let's say the accounting bodies all over the world or the accounting bodies in India make certain changes and they say, as per so and so, effective so and so date, this accounting principle will no longer be into existence and it has been replaced by this. Or if this accounting principle is changed to this, then you have to change the accounting principle. Secondly, change would result in a more appropriate presentation of financial statement. Now, to answer your question, you cannot just change it whenever you want. The change should give you a positive impact in the presentation of the financial statements. Only then will you be allowed to change the accounting policies and procedures. Let's go through this. A change in accounting policy may have a material effect on the items of financial statements. For example, if depreciation method is changed from straight line basis to written down value method, or if cost formula used for inventory is changed from weighted average to FIFO. Now, we all know what is depreciation. And depreciation, there are two methods. One is your straight line method and one is written down method. So let's say 1 year you use straight line method, the next year you use WDV method. That is a change in the accounting policies. You're allowed to do it, but you also need to disclose the effect of such a change in your accounts. Hi Asma, thanks for joining my session. And in case you have not followed my profile on the Unacademy app, please follow it so that you get live updates about my sessions. Okay, so hello Asma. So whatever changes you make, you are free to make it only if the two conditions are fulfilled. That means if it is required by an accounting standard and if it change would result in a more appropriate presentation of financial statements. You are free to change your accounting policies and procedures, and you also need to disclose that in your accounts. Now, with this, I would end my today's session on accounting principles, concepts, conventions. I hope you found it useful, and thanks for being a part of this session. Do not forget to use the code Prathik when you make your Unacademy Plus subscriptions. Unacademy Plus subscriptions are provided for 1 month, 3 months, 6 months, 12 months, and 24 months. Please choose the appropriate package and make your subscriptions. Do not forget to use the code Prathik. And in case you have not followed my profile on the Unacademy app yet, please go there, click on my profile and click on the follow button so that you get live updates about my sessions and the timings of the same. Thank you so much. I shall be conducting many more sessions and I request you to be a part of it. And take back something positive from it. I'm open to positive feedback as well. So any feedback, please let me know. It's a pleasure, Aryan, that I could help you from this session. Thanks, Alexi. It was nice of you to attend my session. I will be taking up a session very soon again. You will get the notification if you have followed my profile. So I request you to do it. Thank you and see you soon again in my session. Welcome.